Good evening. This is Doc Severson for the TheoTrade report for Thursday, April 19th. This is a 4-hour chart of the S&P 500 futures, and I'm calling this the most interesting chart in the world right now. Because if we kind of zoom in on this, we can see this rounding base pattern, whether you want to call it that, or whether you want to call it an ascending triangle pattern or an inverted head and shoulders pattern, whatever you want to call it. It did break out the other day. Now, what we saw today was the price coming down to retest the breakout level at that neckline around 2680 to 2682. And now we can kind of see the problem because this breakout the last couple of days came on very, very low volume. And I'll show that to you in just a minute here. What we've seen is this is a very common move to retest the breakout level. However, here is what's happening now. If we see the price rally up to some form of lower high, and then rolls over, this is going to cause an epic throwover and is going to do the maximum amount of damage at any given time. What you have to ask yourself is, okay, based on what happens right here, who's going to get hurt the worst? And certainly it would be bulls piling on, celebrating the breakout on very low volume. That's the problem here. If that breakout wasn't accompanied by bigger volume, we'd take it a little bit more seriously. But right now, this has all the hallmark of being perhaps a throwover. Now, it can certainly rally from here and go up and attack that trend line that I pointed out the other day. But you have to ask yourself, who's going to get hurt the worst here? And that absolutely is going to be the bulls, because the larger time frame picture here, and this is where we go over to the larger chart with all the different time frames. The larger time frame picture here is that we're just stuck in a range. And any kind of breakout that we've seen has been faded. And there's the closing bell. So any breakout that we're seeing is eventually faded. And it may not necessarily happen where we expect it to. I think everybody's expecting this to go up to that trend line and maybe then fade from there. But what we're seeing here is that the upper expected move for the week is providing more overhead resistance than originally was thought. Now, I think what we're going to see is all the pundits focus on the 50-day moving average. Nobody cares about the 50-day moving average. I mean, it's a great thing that it's above there, and perhaps there was some buying to keep it above the 50-day moving average. But nobody's making a decision about what they're doing with their trading based on an archaic simple moving average, which is a trailing signal. Now, keep in mind, regardless of 2 red days in a row, so a little bit of a small body candle up here and then a little bit of a reversal here today. So keep in mind that just because today was a red candle, one candle does not a reversal make. So it has to actually change polarity for this to occur. So how that would look, again, is going to be something like this, perhaps coming down there and then bouncing up. And this is very important for the bounce back up, because what it does is it gives bulls the all clear signal, and they get complacent, they let their guard down, and then this can be when the selling occurs. It's always the lower high that's the most dangerous signal for the bulls that occurs. It's always that lower high. Catches them off guard every single time. My decision box at this point comes down to a very simple price level. It's as simple as just drawing a box around this level here. So this area here, if the price is able to break out and above, then this continues the series of higher highs and higher lows, and we're probably heading for that trend line overhead. And then we'll see what happens when it gets to that point. However, if the price is unable to rally above there, especially if it prints a lower high and then rolls down below this, then say good night, because we've also got this trend line which is in play, which I showed to you on the 4-hour chart. So that previous, the most interesting chart in the world chart, had that trend line on there. So if we not only print a lower high, but also cut through that trend line, then we're going to be heading down in this area. And one of two things could happen at this point. Either a very scary higher low is going to be put in, scary for the bulls, and then we're going to see a rally from there, or this will continue going lower. And this could be really a very important break point for the market, because as I've been talking about for some time now, this is called sideways and volatile market character. Sideways and volatile market character. This is very common to see. And we will see it break in one of two ways eventually. Either it breaks back up to the upside and goes quiet and trending again, in which case we'll see all the volatility just completely sucked out of the market again, and we're going to go back into long gamma type trades once again. Otherwise, we could see what we haven't seen for some time, and that would be a transition into trending and volatile market character, which is code word for bear market. So what happens over the next few weeks here is going to be particularly important based on what happens to the market from here. Either it recovers and goes into a low volatility state again, or we're going to see it start to trend to the downside. And maybe, just maybe, we'll start to see some implied volatility tick up at this point. I mean, right now, if we go over and compare implied versus realized volatility, right now, if we compare implied versus realized volatility, let's go out to the SPX. And what we can see right now, again, implied is the blue line down here. This is the implied volatility that's forward pricing in risk into your option chains. And this orange line up at the top is the realized volatility. This is the actual volatility that we're seeing on a 30-day basis. So it's much higher than implied. So this gap right now means that if you're an option seller, it's going to be very, very difficult in the near term to be making any. You're going to be playing close quarters battle on type of the price action. And when we start to move, you're going to get run over. That's all there is to it. This is very, very difficult price action, especially coming off of a relative low where we should have had relative high implied volatility. A couple more things here today. This is the 10-year note. And what I've been talking about the 10-year note is, of course, we've got this from this monthly downtrend. We've all of a sudden transitioned into a monthly uptrend. So we've been in this monthly downtrend for a long, long time. I mean, going back to the 2000 tech bubble bursting. This is when the 10-year note started to really drop to the downside, right? So now we've all of a sudden, for the first time in a long time, started to transition into an uptrend, rising rate environment. Now, it's not going to happen all at once. Right now, what we saw was the weekly chart exhausted, and it's put in a nice little flag, appears to be breaking higher. So don't look now, but it's breaking higher at this point. So we're not going to get any rate hikes, certainly until, I mean, the very earliest one would be in May at the next Fed meeting, but unlikely for that to occur. Usually they do those on the quarterlies. So June will be the next one, and it's starting to price in probability of that occurring. So we'll see whether or not this starts to break out, if it actually hits the 3% level. I don't know that the equity market's going to take it all that well. So if we look over at like the bond market right now, if we just see the 20-year Treasury bond ETF, that is in a bear flag right now. That's a bear flag, and rising rates are not going to do well for this. And we're starting to break from that bear flag, so watch out for that. And then also in terms of the dollar is doing kind of the same thing. The dollar index as well too. Bear flag. So this is a very negative pattern. It's a bear flag. Expect this to break lower. Hey folks, before you go, I want to talk to you for just a minute about the TheoTrade Live Return of the Trader event. Why are we calling it the Return of the Trader event? Well, because we believe, and we've already seen, volatility returning to the market as of February and March, and we think it will continue going into the rest of this year. So there's no better time than now to get prepped for all this volatility than at this event, because this is what we're going to be focusing on. So look at all these happy people from our last event. You can be one of them at the next event, which is coming up the beginning of May. So May 3rd, 4th, and 5th. I'll get into that in just a minute. Right now for members, the members are getting pricing of $1,100. So you've got until April 1st to get this price level. Otherwise, it's going to end up going up again. And also, don't forget that the event is limited to 200. So once we do sell the 200th ticket to this, we will shut down admissions to this event. All right, so where is it at? When is it going to happen? All those things. So it's going to occur at the Scottsdale Resort at McCormick Ranch in Scottsdale, Arizona. This is where we were last September. It is a really, really nice place, and I'll talk to you a little bit more about that in just a minute. So who's this for? Intraday traders, swing traders, income traders. We've got something for everyone here. So again, on the 3rd of May, May 3rd, is where we have the event registration and the happy hour. So you can meet all of us live, can corner us in the room and ask us questions, and drinks are on TheoTrade. So don't forget that. We'll also have a quick event for you guys with Jeff and Don coming up. On Friday, May the 4th, this is when everything kicks in here. First session of the day will be Return of the Trader by Don Kaufman. And then we'll shift into Jeff Bierman. Professor Jeff Bierman will go into negotiating intraday volatility shifts, something that's very, very important in this type of volatility. The last session in the morning will be Perfecting Your Nasdaq and Intraday Trading Style by Tony Rago. And after lunch, I'll come on board with Fractal Analysis Intensive. So we're going to be talking about fractals in the context of what's happening in the market today. And then we'll go into Taming the Trend Day by Corey Rosenblum at the end of that day. So that is Friday, May 4th. So it's a market day. And then we will have the second day, Saturday, May 5th. And we're going to go right back into Don first thing in the morning. Probability and Profitability in Trading by Don. Price Action Intensive, again, by myself. So I'm going to be going into specifics of reading price action. Tony will go into more about intraday trading, the Nasdaq E-mini. Don Kaufman will go into the state of the markets. We'll talk to Corey for creating your game plan for the next trading day. And then we'll have all of us up front, closing ceremonies, final giveaways, and everybody is sent home at that point on Saturday evening. So you might be saying, well, that all sounds great, but what's in this for me? Well, we've got 9 reasons here as to why we think this is a good event for you. First of all, just hearing repetition, practice and repetition over the next 2 days as we conduct this seminar. You're going to hear the same things again and again, and pretty soon you'll start to think in the same way. Don't forget that almost all of us trade at home or in our office by ourselves, and many times we don't feel like we're connected. Well, this is where we can also show you that you're part of a bigger community. You're going to hear from others and understand what they're doing in today's market. And by doing that, you'll discover your one-of-a-kind style. This is where you form your own trading strategies. You're going to be talking to not only the instructors, but also other people in the room to gain their wisdom, get their approach from things. Understand how to risk manage in today's market, play it safe and play it profitably. And make sure that you're not trading just out of boredom. We're not going to get boredom in this year's market, but making sure that you're looking for just the best setups and then being decisive about taking those setups. And then finally, ultimately, this is what we're all after, is that peace of mind and freedom that all of us are looking for through individual trading. Now, this is not some event where we just sit up at the front of the room and put a virtual wall in between you and us. You're going to meet all of us. You're going to talk to us at the breaks. We are here for you, to talk to you. So Don, Jeff Bierman, myself, Tony Rago, Corey Rosenblum, as well as your other 200 attendees. Now let's talk about the actual location, the Scottsdale Resort at McCormick Ranch. And I'm particularly excited to talk about this because there's some really cool things about this place. So it's pretty easy to get to. It's not that far from the airport. It's a world-class airport. You should be able to get direct flights in just about regardless of where you live. Let's talk about the venue for a second. This is what a typical room looks like. And I do want to mention, I mention this every time I talk about this event, but I love the chairs that they have here. The chairs have got armrests. You're not going to be sitting here playing elbow wars with a guy next to you. They recline, so you're going to be comfortable all day long. You're not going to be sitting on some little narrow, tiny banquet chair that's going to wear you out after 3 hours. The weather should be excellent at this time of year. There's all kinds of events and outdoor activities that they have at this particular ranch. Now let's talk about the meals as well too. This is where, again, I get excited about this because breakfast, this is not just any breakfast. This is a really, really good breakfast served on Friday and Saturday, as well as the lunch. So we bring in the lunch. We bring in the lunch here for you guys. Bring in the lunch. So both days we're going to serve you breakfast and lunch. For dinner, you're on your own because a lot of people want to go explore the area. But what we find is a lot of people get together as groups anyway and go out to eat for dinner. So anyway, get your ticket right now. Make sure you get it in before April 1st to be able to get that preferred pricing. Don't miss this event. This is a great time. There's a lot of terrific information that's brought out there. Everybody walked away with a smile on their face last time. We want you to be one of those people to join us as well too. Hope to see you out there. Take care.